Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we're going to talk about this chart. Sort of blew up social media over the weekend. To put this in perspective, I'll just start with, or read the tweet, or read the chart, and then we'll talk about it. And I have another chart that actually explains what exactly one of the major causes of why this is happening.
Okay, so what is that we're talking about?
Oh, this is a chart about the estimated percentage of 30-year-olds who are both married and homeowners. They have to have both those things. And so if you look at the chart here, it starts all the way on the left, basically a little before 1950. It ends roughly today. And you can see back then about over half of all 30-year-olds were married and had a home. And then it sort of dropped into, by 1990, it was like 44%, still a decent amount, right?
Mm-hmm.
Okay. And neither one of us were 30 by 1990. Then by 2000, it was down to 33% or so. And then today it's 13%. Mm-hmm. So what was interesting about this chart was there's a couple comments on it here. The original poster said the graph says it all, something's fundamentally broken. I don't care what interest rates were in 1991. Mm-hmm. And then the next one is Chamath Palihapitiya says, something is clearly broken. It's time for those of us who are able to live this out, figure out what to do to help the millions who aren't anymore. Juana, what is the number one thing besides forcing some people to get married when they're young to sort of fix it? Let's talk, why is it like this? What are some factors do you think that have changed? Because this chart goes back like over 70 years, almost 80 years.
So society's changed.
Okay.
I mean, society's changed. The whole social fabric has changed. We don't meet people in person anymore. We have discourse online. We behave online, not in ways that we would ever behave in real life. We don't have those kinds of relationships. And let's face it, people who buy homes, they buy homes because they're nesting, right? That they've got a partner, whether they're married or not, they're in a committed relationship. They have a partner, they're nesting, they're building a life together. They have discipline, they have commitment. So they're exhibiting that commitment through their relationship, and they're further exhibiting that commitment through the committing to purchasing a home. So there are a lot of social dynamics in there that really are aside from the monetary issues. I think these gentlemen were kind of hinting at what I'm saying, which is that this fundamental change in society has caused this.
Some of the comments were very interesting. So one person's comment was, it's the bank's fault. These banks, these big banks have bought up all the houses. Okay, first of all, that's a relatively new phenomenon, literally the last decade. And two, that all of the major asset managers and hedge funds, BlackRock and all those, combined own less than 1% of all of the housing stock, about 140 million houses.
And those people out there who have homes on the market, they would tell you that they'd be happy to sell their homes, right? So there are homes to buy. So inventory is not the issue.
Okay, the other thing is, it's got to be interest rates. Interest rates are way too high. They've never been this high in history. On the left side of this chart, Juana, in 1950s, mortgage rates were like 3%.
They were more than that in the 1950s.
50s,
yes.
The lowest interest rates we ever had in the U.S. were, you get a 3% mortgage throughout most of the 50s.
Okay.
And then by the 80s, they'd gone up to 18%, 16 to 18%. And then they started falling again. It took them about 30 years to drop back down to 4%. And then, of course, they're up at 6%. People are freaking out about that. There is nowhere on this chart where you can look at any correlation to interest rates cost this, right?
No, it's like I said, it's not interest rates. It's not money. This is not money driven. This is a societal change. And we're seeing it, in these graphs.
Okay, let's flip over to this chart. Now, what's interesting about this chart, this is the median age at first marriage. The green line, males. The purple line, females. forget everything to the left of the middle, because we're going to start about 1950, where it's roughly 20 years old for a woman, 22 for a man, and then it's been rising, rising, rising. This chart is almost the exact reason why people are not at 30 do not have a house. So Juan, let's talk about this, because this is societal.
Mm-hmm.
Okay, let's pretend it's 1960, 70. You get married. If you're getting married in 1960, you are not a boomer.
Mm-hmm. Correct.
Yeah, you're the silent generation. Okay, boomers aren't even the oldest boomer is 14, not getting married. Okay, you get married at 20, 21, 22. Very common back then. How does that change your life? Stability financially, the whole thing.
Right. So when you get married, it doesn't really matter whether it's 1950 or 2025. It's the same thing. All of a sudden you have stability. You have a partner that you're building a life with, that you have shared goals. You're sharing everything with. You're in a committed relationship. You make commitments for your future. And that's really the key, a commitment to the future. You're in a relationship because you're committed to the future. And in that relationship, you're buying a home, you're maybe saving for retirement, you're doing all these things that are part of nesting, part of growing up, part of a committed life.
It's funny. I see these memes where people say, oh, if I just don't eat avocado toast or Starbucks, I'll be able to save up enough money to buy a house. Well, they joke like, ha ha ha. But what's funny is that actually exposes their ignorance, because the difference between what they're paying in rent and what they could probably get a house for, and I understand not in every market, but in most markets, is like $400 or $500
Mm-hmm.
is the difference in your monthly payment. And I guarantee you that somebody making, $70,000 a year or $80,000 a year, which is a median income in the US, if they just didn't spend $400 or $500 a year on other stuff, and they prioritize homeownership like a lot of people I know did a long time ago, it was a big deal. Juana, how old were you when you owned your first home?
I bought my first home when I was 20.
Okay. I was 22. What was it like? Did you just what was that experience of doing that like?
So first of all, I was in college.
Okay.
I was working.
Okay.
And bought a house that I could not afford.
Okay.
And it was tough. It was really tough, but I didn't do it by myself. I was married. And so it was really tough. For the first couple of years, we were so poor, we didn't have anything on the windows. We couldn't even afford sheets from Goodwill to cover up the windows, okay? So we lived in a fishbowl. We lived on cereal Monday through Sunday. The only meal that was not cereal was on Friday or Saturday night when we would invite friends over for a potluck. That meant that they had to bring food over so we could eat something other than cereal.
Right. The first house I bought so most of the time I was in the military, I lived in base housing. I did buy one house when I was 22 years old, and it was a stretch. Mm-hmm. But I'll use the example of I get off active duty. So I'm no longer making what I made in the military as a pilot. And I'm now an airline pilot, right? And I'm making $2,300 a month and married with some kids. And my mortgage payment is $1,100. It's literally it's almost half of my income. It's like just under half of my income. And it was a struggle. It was really hard for about the first 2 years till I got some pay raises. So, and we could have easily just said, oh, we can't afford it, because we could have probably rented a house for $800 a month instead of paying $1,100 on the mortgage. And that mortgage, you remember, it included taxes and stuff like that. So it wasn't that bad. But why it paid off was we bought the house for about $160. 4 years later, we sold it for $240. That gave us a chunk of money to move the equity to the next house. We went to buy a house. So we're sort of in the game. And you can't get in the game until you either start saving the cash or start doing the thing.
Right. So, but all of this is what? It's about planning for the future. It's about commitment. It's about sacrifice. It's about delayed gratification. Okay? Really, that's what this is all about. And that's not necessarily what these subsequent generations are subscribing to. These subsequent generations are more about buy now, pay later kind of thing.
Mm-hmm.
It's all about them having the instant gratification versus the delayed gratification.
When I was so I had this interesting conversation with a friend who's got kids, and the kids are oldest is I think 21 and the youngest is 7. And it was at what age did you let your kids have a phone, like a smartphone to take to school? And the oldest was like, oh, I think he was like 14 or 15 or, definitely in high school. And then it got back to like the 7-year-old has one now, right? And, when I was going through that age group, I didn't have anything.
Well, but in all fairness, they weren't around. So.
No, but I'm not saying it had any other thing. It's not like I had, like kids would work summer jobs just to be able to buy a car, just so they could get around.
Sure.
I don't see like kids working a summer job so they can save for a house or do some other thing. Actually, have a lot of friends who did in their early 20s, bought houses here in Vegas.
Yeah.
That were either in college or just graduated college. And yes, it was cheaper than it is today, probably as a proportion, maybe not. But the thing that made it work for them was they prioritized the purchase of the house and the payment of the house versus spending money on a bunch of other stuff.
Right. So again, we're talking about societal changes. And part of that is, I think, because subsequent generations were raised with more than previous generations had, because previous generations didn't have as much, so they doted on their children more, they provided their children with more, and so it upset that balance. And we know that the pendulum swings both ways, and right now it's swung toward people not being in these committed relationships and not making these commitments outside of those relationships as well, like to purchasing a home. But we know that this will change in time as well, as these people mature and recognize maybe some things that are missing in their lives, and they sort it out, and maybe subsequent generations kind of get back toward the middle of it again.
I think one thing, I'm going to put the chart back up. I think one thing the chart is missing is if you're 30 and you're married, there's a good probability that your parents are boomers or older Gen Xers.
Older Gen Xers.
Yeah.
Yeah.
Yeah, and you're probably, well, I have a friend who's a boomer and he's got 7-year-old daughters. He's 67 years old. He's got 2 7-year-old daughters.
Yes, but he's more of an outlier.
You will likely at some point inherit some houses,
yes.
One or more.
Yes.
Right? There will be houses passed on. I'm not too worried about this. I think, honestly, this chart, it's freaking people out more than it needs to. I think this reflects more about being married by 30 than homeownership, because it even says on there, it says married and homeowners. Mm-hmm. So if everyone was married, but only 13%, or if every 30-year-old had a house in the country, but only 13% of all 30-year-olds were married, this is what the chart would look like. Mm-hmm. It would say 13% of 30-year-olds who were married have a house. I think this is more about the waiting to get married than it is about real estate, whatever.
Right.
Yeah.
Okay. Well, that was interesting.
Yeah.
Leave us your real estate related comments. This was more of a sociological discussion than a real estate discussion.
I thought but it was huge on social media. Like if you look at the bottom of this thing, 1.1 million views. That 1.1 million views. Yeah, a lot of people commenting on it.
Okay, so people are spending time on that rather than on live relationships. Got it.
Yeah, they should get off X and go out and meet another human being, talk to them, use the word use your mouth and speak to the person, and then get married and go buy a house.
There you go. So remember to like the video, subscribe, hit the notification bell, share the video, leave us your real estate related comments, and leave us your suggestions for videos. We appreciate them, and we try to do the videos that you suggest. We'll see you guys on the next video. Bye.
Bye.